Tax write-offs for Airbnb hosts. This video will share the basic tax laws surrounding renting a room in your home or renting property using sites like Airbnb. Sites like Airbnb usually provides the hosts and the IRS with a 1099-K or a 1042-S form, which shows your earnings for the year. You want to be very sure this income shows up on your tax return. All rental income is taxable. There is an exception to this rule. If your property was rented less than 14 combined days, your income is non-taxable. Depending on the type of services you provide to your guest, will determine if you report income on Schedule C, as in cat, or on Schedule E, as in elephant. This is extremely important. If you provided personal or substantial services to your guests, you would file using a Schedule C. If you did not provide personal services for your guest, you would report your income on Schedule E. The major difference between a Schedule C and a Schedule E is the income from a Schedule C is subject to self-employment tax. Income from a Schedule E is not subject to self-employment tax. For this reason and the ability to write off up to $25,000 a year when filing a Schedule E, this form is more favorable when it comes to taxes. The concern is, hosts who provide personal services for their guest oftentimes get better reviews and more bookings. You may qualify to file using a Schedule C if you do any of the following services for your guest. Cleaning the rental portion of the property while the guests are still there. You provide concierge services. You provide tours and outings, or meals and entertainment. Transportation or any hotel-like services. Insubstantial services would include providing heating and AC, water and gas, internet and Wi-Fi, cleaning of common areas, repairs, maintenance, trash collection, or payment of homeowner association dues. You can report your income on a Schedule E. Also, a percentage of all of these expenses are deductible. Also, painting, room decor, carpet cleaning, window treatment, etc., are also tax deductible in full when associated with the rental portion of your home. This would also include maintenance for the restroom the guest uses. Furnishings, art, entertainment equipment, televisions, and computers are deductions which can be depreciated over time. Any equipment used for your business or your guest can be depreciated or is tax deductible. You may also deduct the cost of marketing your rental, online or offline. The cost for professional images, staging for the images, lighting, or even professional models are all tax deductible. If you use pay-per-click advertising online to promote your city, along with special events, these expenses are tax deductible. If you pay an online consultant to help you promote your rental or to increase your rental income, including attorneys for legal fees, these expenses are also deductible. Any and all expenses for your rental business are legally deductible, including the miles you drive for business. You will need to write down the date, the number of miles when you started, and the number of miles when you return home. You will also need to write down your destination or the reason for the miles. All of this information must be in writing. There is another important factor: passive activity or non-passive activity. Rental activity generally falls into the category of passive activities. You will need to discuss this option with your tax professional. If you handle your rental process on a site such as Airbnb, then certainly you could qualify for active participation. You don't want to get this wrong, it could cause a red flag. Again, you may deduct rent and mortgage costs based on the percentage used for business. The cost of maid service, utilities, cable, internet, music, homeowners insurance, repairs in rental space, depreciation, and even commissions paid to the rental agency, such as Airbnb. Yes, Airbnb and all of their fees are tax deductible. There are so many more details pertaining to the tax codes surrounding rentals. Hopefully, this video has served as an informative summary of your tax options. For complete details, visit irs.gov or contact your tax professional. If you owe taxes or your income has increased greatly, you may want to take our online course to learn how other small business owners have legally lowered their taxes using last quarter spend down tax planning. The course is on Udemy and is affordable, effective, and easy to follow. You can find the link below the video. Thank you for watching. Click the link below to save on taxes.